Good morning. Good morning. I want to welcome everyone to the Miami-Dade Chamber of Commerce and the Small Business Development Center of Florida at FIU's financial webinar series. I want to welcome you. We're going to get started in a few moments as we get more people coming on in. Feel free to say good morning in the chat. We're going to be using the Q&A for questions. So if you already have questions that you want to make sure that our presenters speak about, feel free to put them in the Q&A. It's good to see everyone coming on in today. We're going to get started in just a few moments. I want to welcome everyone. Welcome, welcome, welcome to the Miami-Dade Chamber of Commerce and the Small Business Development Center at FIU's financial webinar series. This is actually one of three. Today we're going to be talking about financial statements. The next webinar, which will be on August 26th, will cover budgeting, forecasts, and projections. And webinar 3 will talk about managing your cash flow. These are all things that will be very important for accessing capital, for making sure your business expand and grow. I already see some of those asking for this information, whether or not it's going to be recorded in public. Yes, it will be. You can always visit www.m-dcc.org /webinar recordings to see all these technical assistance webinars, and we will have this one up. Just give us about 24 hours after this is published or after we do this, and we will make sure we get other people on. So good morning, good morning, good morning to all those. Feel free to say good morning and introduce your name and business in the chat. We may be able to say a few things to speak to others about their business. So if you have particular business, we may be able to include that in the presentation, just to speak more specifically on how you may use financial statements and interpret those financial statements for your business. So feel free to introduce yourselves, put your name, your business, your email, your phone number. They're going to be, right now we have over 43 participants. So as you know, as business owners, not only do you want to get this knowledge, but you want to network. So people don't know what you do unless you put it in the chat and let people know what you do. So please put that in. And we're going to we are to the time. I see 42, so we're going to get started. Want to welcome you to the Miami-Dade Chamber of Commerce and Small Business Development Center of FIU's financial webinar series. As Miami-Dade Chamber of Commerce, we are one of the largest minority and Black chambers in South Florida. We do these technical assistance workshops in partnership with Miami-Dade County, Career Source, the MBDA Center, and also FIU, to give business owners an opportunity to learn and continue to grow. Prior to the pandemic, we used to do a lot of these in person. Now we're doing it online. We'll continue to do these online, as it seems as though we get a lot more participation and engagement online. We'll have some in person because, as I said before, we have to continue to network and develop each other, and being able to talk to business owners is very important. So this is part of a series we have every month. The next 3 months that we're going is specifically on financial statements, understanding projections, understanding your cash flow. Over the past few months, we've had workshops in partnership with Jackson Health to talk about understanding government contracting, how to read a bid, how to submit a winning bid. We've also had one with Career Source to talk about leveraging Career Source opportunities for your employees. So this is a part of a series, and you can find this information out at www.m-dcc.org. With that, I want to welcome our partners for today's webinar, Brian at South Florida, actually the Small Business Development Center of FIU. Brian is an amazing partner. FIU has amazing resources that our our business have been able to take advantage of, from their scholarships for executive management to internship programs and also free consultants. So I want to turn it over to Brian to introduce our speaker, introduce the SBDC. I want to thank everyone for joining us today.
Thank you, Matthew. And I just want to say a shout out to Eric. And also I saw Beverly James is in there as well. So I want to give a shout out to Beverly, who's kind of behind the scenes, but like super important at the chamber. And I just want to thank you guys for that partnership. We've always had really good partners with the chamber. And as Matthew mentioned, we've had the opportunity recently to partner on a number of initiatives, whether it was getting FIU College of Business students for internships, also some opportunities for executive education training. And then we also now have this financial webinar series that we're kicking off that's been very well received so far. And it actually has kind of grown organically because we have a lot of our clients that are chamber members. And they were like, hey, we want to see more of the stuff you guys are doing, and we want to see some partnerships. So it actually is kind of spurred by a lot of the members at the chamber. So definitely if there's opportunities for more things, more partnerships with us between the chamber and SBDC, definitely feel free to reach out to the chamber or to me, because they're just really great partners in the community. And so we're just happy to do it. As he mentioned, I'm the regional director of the Florida Small Business Development Center at FIU. We're an SBA resource partner. We're located under the College of Business at FIU, and we're really have a really great job. Our job is to help you start and grow your business. And so we get up every day. We have really great consultants such as Raju, that they're all specialists in particular areas, whether that's international trade, government contracting, as Matthew mentioned, business strategy, access to capital, all these different areas. And they're all specialists. They're not jack of all trades, master of none. So it's not where somebody comes in and says, hey, I need help with a business plan. Well, I'm more of a marketing person or whatever. No, everybody on the team is a specialist in the particular area that they're going to help you in. And like Raju, he's managed his own business. He's gone into other businesses and kind of helped turn around. He's a very experienced consultant. And Raju is also one of the ones that is just a really great trainer and really great to work one-on-one. I know for a lot of the businesses, we kind of joke that Raju has his own parking space because he spends so much time at the business. And I'm the one that has to review kind of some of the sessions he does. So I'm like, man, you were like working on that business for 25 hours for 30 hours. And he's like, yeah. And he talks about all the great work he's doing to help the businesses. So we're really happy that Raju is able to, share some of his knowledge with you today. As Matthew mentioned, this is the first of 3 webinars we're going to have they're not necessarily the sexiest topics for a business owner. It's not marketing, it's not revenue, it's not sales. But this is very fundamental to running a successful business: financial statements, budgeting and projections, and also managing your cash flow. And I always say that I really do get kind of emotional and teared up when I see 70 people, 60 people at managing your cash flow, because that's so important for businesses. If you know how many businesses that we meet and it's kind of like in dire straits because they haven't kept a handle on their cash flow. They haven't really gotten to understand financial statements. So these are really fundamental topics to running a successful business. So we're really happy to partner. In terms of housekeeping, a lot of you guys asked, will the presentation be available afterwards? As Matthew mentioned, they're going to have a copy of it. It's going to be available on their website. We're also going to have it on our YouTube page. So if you want to see it afterwards, kind of at your own pace, you can do that. We do ask, pay good attention here though. Don't just log off. If I see 50 people log off, I'm going to feel bad. So next time I might not say that. But you're also going to see some polls pop up. Please take a minute to fill out that poll. That helps us to know who's on the webinar. And then also at the end, there's going to be a poll like, was this a good presentation? Did you get good information? This helps us to inform kind of like the offerings that we provide, and if there's additional topics we can cover. And then as we mentioned in the chat, please put in who you are, what's your business. We want to know who we're talking to. We want to make this really interactive. We don't want to make it just like a lecture style. And then if you have any questions for Raju as the presentation comes up, please put in the Q&A, because then we can get to it. Some of them are things that we can answer immediately. Some of them we can save towards the end. So we would encourage you to put your questions in. Don't make it easy on Raju. Raju is a very experienced business owner, very seasoned consultant. I want to see you guys give him some really tough questions where it's like, I need a minute, or let me think about that. We don't want to make it too easy on Raju. I know it's a Thursday, it's not a Friday, but let's make it really, get some good information for your business. And with that, I'm going to turn over to Raju. You didn't log in to hear me talk. You want to hear the great presentation from Raju, and then we'll be available at the end to answer any questions that you might have. And just thanks again to the Chamber. They're really great partners, and we're looking forward to kicking off the financial webinar series. So thanks.
Good morning, everybody. Thank you, Brian, for that very kind introduction. And hopefully you will follow Brian's, you can ask questions, and hopefully I'll be able to answer all of that. Let me start sharing my screen. Okay. So let me arrange my screen. Okay. Basically, the topic we're going to cover is obviously financial statement, a little bit about our own center. We are actually funded through a part with U.S. Business Administration. Let me take away this.
And you can skip to that, Raju.
Oh, okay. As far as the network, this is the network. These are the people I work with, my co-workers at the SPDC. What we're going to try to do is go over some accounting basics. I want you to all understand we do not want you to become accountants, so you do need to understand the language that the accountants and the finance people kind of their own lingo. They need to, you need to understand where they're coming from. And not that you're going to become accountant, but at the same time, you should be able to question your accountant on certain things on the financials, see if things were done, whether your bookkeeper is doing things correctly or not, and see some funny, if you see anything funny that doesn't register with you, you should be able to ask questions on it, knowing how it affects your overall business. So here, benefits of financial planning and goal setting. I know a lot of us do not go through, we just probably do our business day to day. But somewhere along the line, you do need to make sure that your planning is within your own personal income goals. They need to match. So if your personal income goals don't match with your business is not going to be able to provide you what you really want. Mm-hmm. And you need to understand.
And Raju, move a little closer. I think that they said they were having trouble hearing you. Move a little closer.
Also, you need to understand that there are some startup costs if you're starting up a business, and also some operating expenses and funds needed that you need to finance the business. These are all key points that you need to have in your financial planning when you're planning or starting a business, or you already have an ongoing business, how you're going to have it sustained and be able to scale it. Okay. Why is it important? Well, the main point, obviously, it organizes your business finance, but the key point here for me is a modeling tool to help you evaluate variable factors. This is for me a very key point because this one provides you a model, a business model, a financial model for your business. And then you can see what are the variable factors in your business that is going to affect your bottom line, your cost, your revenue, your pricing. All of that, we will touch on it today, but you need to understand that the way I look at it, the financial plan is, for me, it's a modeling tool. I need to know what your financial business model is to dictate. Now, over time, that will change. Everybody who has gone through the COVID issue, you have seen that your original business model has not worked or has changed, or you had to pivot from that. So those are the things that when we do not look at it as a modeling tool, but it is basically a modeling tool. Obviously, there is some concern. It's spreadsheet is too complicated, don't understand the figure. You have resources like the SBDC, your accountant, that can help you with all of this, your bookkeeper. They should be able to help you with this, but this is their work. This is what we do. This is how we function. So it's not that you are at it alone. You do have resources to help you. And now, a lot of people say, well, Do I really need one? No, you don't really need one, but if you want to grow and be successful and be on the right path, you need to have something in paper and in the plan on what is that you do. And we'll run through some examples today to show you how these financial models, all of this help you, even in the pricing, how it'll affect the pricing, okay? Obviously, we have three financial statements. One is the income statement, cash flow statement, and balance sheet. And we're going to address each one of them. Now, most of you are familiar with the income statement. That's how you kind of work the business. Some of you will know a little bit about the balance sheet, and and that's usually the work that your accountant lives. Your CPA, this is his work. This is more or less your work, and for the most part, nobody worries about the cash. Some accountant will give it to you, and some accounts will not. There is a purpose for this cash flow statement, and we will try to cover it up. But I'm going to start off by creating some interaction here. Why is the accountant always give you the income statement and the balance sheet? And they do not always provide the cash flow statement. Anybody wants to chime in and kind of give their own feedback on it? You can post it on the.
The only feedback, Raju, is somebody was just mentioning about accountants, just asking, they've had two really bad accountants. Do you have any suggestions?
Yeah.
How to pick a good accountant?
Well, accountants should give you all of this. The fact that they don't doesn't mean they're bad. That alone does not make it bad. Uh, this is a statement, and I imagine somebody who's been in business has come up with a question after the end of the month and say, "Hey, I made some money. My profit shows, income statement shows I made some money. Where's the money? I don't see it in my bank. I don't see it. Where is it?" Well, the cash flow statement will tell you where that money is or how that money was spent. This is the combination of the income statement and the balance sheet. Combines both of them. And when you have that feeling at the end of the month, you should ask your accountant to give you the cash flow statement. Now, you can get it if you're using QuickBooks. There is a statement right below the balance sheet that says cash flow statement. You can print it out and you can see it for yourself how the money was spent for the month and where the money was. And this one tells you where is the money, basically. Not that it's going to tell you a lot of information, but it tells you some key information on whether it was here or here. Where was the money spent? Okay. Now, for all of this to happen on any of those three statements be possible or be good, you got to have accurate information. You always say garbage in, garbage out, works here. If you don't keep proper information, you don't accurately reflect every dollar in and dollar out of the business. Now, whether you spent it personally, if you use your personal credit card to buy goods or services for the business, that needs to be registered in the business in some form, okay? You do need to be very, very careful on your information. It all starts with the bookkeeping, making sure that your books are current and up to date and properly, all the expenses and revenue are categorized properly. If that doesn't happen, then basically you're back to square one. All you have is a lot of transaction information with nothing. Now, accounting is very simple. Accounting hasn't changed in thousands of years organically, meaning the way it's set up. It's still debits, credit, income, expenses, assets, liability, equity. Hasn't changed. Chart of accounts just gives you have major 5 accounts, 5 to be more. And each one will have subcategories. And within advertising, you may have subcategories. Within car expense, you may have some category. Entertainment, you may have some categories, and so forth. So each one of them will have subcategories in there. But it starts off with 5 major files. Income, expenses, obviously this is part of your profit and loss, and asset, liability, and equity, which tends to be part of your balance sheet. Now let's start with the profit and loss. Also known as income statement, profit and loss, those are the two things. It's usually for a period. We actually define the period. Now, a period can be 1 day, 1 week, 1 month, first quarter, a quarter, semi-annually, annually, whatever the period is, you start. Now, the key here is you start up the next month going back to zero. Now, it has the two components, which is revenue and expenses. Basically, those are the two different things. And then obviously the difference is your net income. Now, this is what we call tax accounting. As far as the accountant is worried, this is what he wants. He will classify this differently in the tax return. And that's it. When you start doing running your business, we have what we do is managerial accounting, where we will tend to break the revenues down in different revenue streams, and expenses, we will break it down into cost of goods sold and regular overhead. Your rent and insurance and depreciation and all of that. That will be part of your expenses. We tend to do that because it provides us information on how the business is doing internally. And you are on a track to kind of create your own business model. You're trying to create a business model based on these financial numbers. Now, our provider said, please do not confuse it with cash flow. I know we're going to have one of the last series of this, the series on this presentation, cash flow. There is a major difference between income statement and cash flow statement. They look very similar, almost to the T. They look alike and can be confused, but they're not the same. They have some major differences, and which will be covered in that series. Okay. Let's look at the balance sheet. Balance sheet is assets, is everything you own, like current, like cash, inventory, accounts receivable, obviously any properties, vehicles, and everything. Obviously, liabilities, everything your business owes or has borrowed. So you owe your accounts payable, you owe your suppliers, you have long-term loans, you have all of that. It should be in this category. And if you have, obviously, equity is your net worth. What is your owner's investor? How much it is? Retained earnings. Now, I'm going to give an example, and well, I want some feedback. I don't like to give lectures, so hopefully you will be more interactive in this. If you buy a truck for the business that is worth $20,000, you put $2,000 down, and you borrow $18,000. How would you break that? How would you break that $20,000? How would you classify all of those three pieces? Anybody wants to kind of come in?
Yeah, post in the chat.
Yeah, post in the chat. Yes.
I didn't see any response. Oh, somebody said liability.
No response? Or 20, let's see, asset, 20,000, liability, 18,000. What happens to those two? Remember, equity is equal to assets less liability. So what happens to the two? If liability is 18.
Yeah, Angela said 2,000 to expenses and 18,000 to liability.
18,000 to liability, so 20,000 assets, 18 to liability, and then Cheryl said equity 2,000. You're right. You will put the 20,000 as a vehicle. You'll have 20,000 as a vehicle. You'll have a loan for 18, and you contributed 2,000. Now there are subdivisions to that your accountant is going to do, and a lot of other adjustments. But I want you to understand the general concept of how this equation works. This equation and this has never changed. always the same. It's never changed. Uh, so it will always remain the same. So you make any changes in here, this equation has to balance. That's why we call it the balance sheet. It has to it has to balance at the end. Okay. This is how a balance sheet kind of looks. You have the assets, you have accounts receivable, cash, supplies, prepaid, insurance, equipment, total assets, and liabilities. You do the same thing. And then you have equity, common stock, retained earnings, and so forth. I have a question. Why is this order the same? I mean, you can read any financial statement of a public company, and they all have the same format. Starts with cash, accounts receivables, supplies, something similar to this statement. Same thing in here. Why is it always the same? Why not just do whatever we want, however we want to do it, and put it in any different order in here, in any different order in here? Anybody wants to chime in?
Yeah, answer in the chat.
Gap, okay, it could be that, there is a gap, but there is a logic to it. There's a crazy logic to it. And you don't need to, you don't need to know gap to come up with that, but they need to, okay, enable consistency of rating and comparison. Yeah, gap created the rules, I agree, but you don't need to know the gap. Guys like us will look into gap and we have to kind of follow the rules, but you're a small business owner. Why should you need to? This might be the form most looked at. Okay. Yes, but there is a logic. Logic is the asset side, cash is the most liquid asset. Accounts receivable is the next liquid asset. Supplies, inventory could be the next most liquid. So the order is created how liquid it is to cash, the proximity to cash. So properties, it's an asset, but it will be down here. Why? Because it takes longer to convert that into cash. The longer or the farther away it is to conversion to cash, further down the list it gets. That is the logic. It's a simple logic, but you can question some of the logic on that one. But for the most part, the reality is how close it is to converting to cash. Now, liability has no cash, but the liability most current one would be notes payable. Notes payable becomes the most current, or the one that we look at. And usually those are payables that have 30 days or less that you have to maintain. So accounts payable, notes payable that are 30 days, you tend to have that priority. So obviously salaries payables are up in that. Unearned service revenue. What will unearned service revenue be? Something similar to, hey, I gave you a deposit to deliver something. I haven't earned it yet, but you got a deposit. Things like that. So those are the kind of the logic you need to understand. And however that this turns out to be for your business, it is going to be GAAP approved because that is what GAAP states. It's how close it is to cash. Now I'm going to, like I said, we're going to try to create a relationship between each of these statements. The relationship between net income and balance sheet is at the end of the net income, it goes up and it says add your balance sheet and as retained earnings. Now, everybody wants to kind of take a jab at what retained earnings means. What does retained earning mean for you, or for in your opinion, retained earning is? Bought and sold, Not, not really. You're not selling any stock because if you look at this statement, your ending retail earning is 2360. You have 2850 that came from the net income. Dividends of $500 is 23. So this is your really deposit not used. No, because this is your net income, not a deposit. This is your net income. This is how much money you made in your profit and income statement for the month of October. And your ending October retained earning is 2360 because this is $500. Profit after expense, yes, that is exactly profit after expense. But what do you think happens the following month? Retained earning from from October will be 2360. And obviously you're going to add whatever income you make. And that will become your new number at the end. So basically, if you follow this logic or this example is whatever the business has made every single month, all the accumulation of all the profit and losses of all of the business life cycle. And it goes back to day one, zero. Starting with zero, and keep adding or subtracting depending on the life of the business. So when you see retained earnings, it's long term. Now, obviously, the best way to explain that one of the best way I use is let's take a sports, football season. Income statement will be what happened the first quarter, what happened the second quarter, what happened the first half, and all of that. Retained earnings will be everything that has happened in the business since day one. So if you're looking at the Miami Dolphins, retained earnings will be all the pluses and minuses of the season since 1966. Start. It's just turning over every year, every decade, adding to it. So this is the earnings since you started the company.
And Raju, there was two questions. One was our in the chat was our dividends stockholder distributions, and then Nancy also had a question: are the notes payable the total you owe to a lender, or only what is paid for that particular time period?
Okay, now notes payable. If you go back to the notes payable, let me go back to that. Let me answer that one first. Notes payable sometimes is current and sometimes it's total. Now, the way we break it up, you have two. You have long-term and short-term. Long-term turns out to be anything above 12 months. Short-term is anything below 12 months. So you may have a loan for 5 years. Short-term will be 1 year. Long-term will be 4 years. Okay, so that's the way you kind of look at it. Now, dividends and stockholder distribution. The best way to say, hey, I need a $500. I'm going on a weekend with my buddies, and I need $500. So I took $500 from the company. That is your dividend. You had a profit of $2,860. You say, well, I made some profit, $2,800. I'm going to take $500 and I'm going to go on the weekend with some buddies and party. Well, that $500 is considered dividends, distribution, owner's distribution, however you want to call it. It is a distribution. Now, in larger companies called dividends, in smaller companies, in private companies, small business called owner's distribution or owner's distribution that I take. Shareholder distribution. So that's and then always a negative. So 2860 minus 500 is 2360. So really, your business has 2660 profit. Now, do you pay capital gains on that one? I'm looking at that one. No, you don't pay capital gains on that one unless you sell it. But that you sell the business, yeah, you have retained earnings, but you don't pay 20 on the 500. Oh, Capital gains is everything above a year. You hold it for above a year. So capital gains will not even play something into this scenario. Okay. So having, hopefully I was able to address some of the questions, but at the same time, retained earnings. Now, what happens with this retained earnings, or how that we can, or how a bank or investor look at it? What happens if instead of 500, I make this 2,000, giving 850 in profit? This is what we call in the industry milking the company, taking all the profits out of the company, leaving very little for the company. So nothing wrong with that. You're allowed to do it. It's your business. You're entitled to do it. But we will look at it and say, well, there's money in the business, but he's taking it. And he has the right to take it. We want to know how much he's taking it, and that's the number that we look at. Because under a normal condition, if I'm buying the business, I'm saying, okay, this is what is available as return on investment, if you want to call it. Okay? This is what we have available. But he is taking money away from he's milking the company. He's taking away the profits of the company. Nothing wrong with that. That's no problem. It just doesn't look good on paper. Okay? Let's look at the cash flow statement. Cash flow statement is a combination, like I said, of the cash, of the profit and loss, and the balance sheet. It's a combination of the two. So when we're combining both, we're looking at cash flows from operating activities, where the cash came from operating, from your profit and loss. We're looking at it. It generated 5,700. Cash flow from investing activity, purchase office equipment, or used to buy equipment or whatever, or sold equipment was -5. Issuing a common stock. Here what I did, I issued common stock, a note payable, payment of dividend, my $500 that I took for my voting and drinking party. All of that created cash at the end of the period. I started at 0, I finished with 15. Okay, this is how you look at it. This is how much cash we have available in the business. Okay. Now, your cash balance started with 15. This needs to match the 15 in your statement of cash. Now, you saw how we started from the income to the balance sheet to the cash flow. These are the connection. And obviously, this is coming from also from the P&L, profit and loss. So as you can see, there's a lot of, this one kind of combines both statements. So in reality, just looking at the other two alone does not give you the true picture. That's why some of you may have the question, well, I have a profit, but where's the money? Show me the money. This is how it tells you where the money is. In this case, obviously it was positive, but in some cases and in most businesses, this number can become negative. That's why you need to kind of keep an eye on this and see how you're spending your cash flow. Now, obviously, when you do your projection, which is the next series in the cash flow, you're looking at this from the perspective of the past. This is what happened in the past. When you do the cash flow, you start looking forward. When you do projection, you start looking forward. You want to make changes, all of this that is good or bad, and move it forward and look at it and how you can grow and make better your business. Now, there are a few things that you need to keep in mind. What are fixed costs? Fixed costs are expenses you may pay no matter what sales you get. Okay? Obviously, whether you make a sale or not, rent, salary, insurances, advertising contract. Some people will say advertising should be variable. It's not. It has no guarantee that it will sales you generate. Has no guarantee for sales. You could spend on advertising and you get 0 sales. Okay. Utility. Now, anybody wants to answer utility bills are variable or fixed expense? Just put it in the chat. Variable, variable. Huh? Why would it be variable? In reality, does it have the key point here is, does it make a difference to what sales you generate? Does it affect directly the sales? It does not change. I mean, it changes up and down during the season. Summer, you're using the AC more. Winter, you're using it less. But it is a fixed expense. It's going to remain about the same over a given period of time. But it does not guarantee you or does not provide you. It has no direct relationship to sales. This is the key point. How does it matter to you generating sales? Okay, so the reality is it is a fixed expense, not variable. Variable cost. What does it actually cost to deliver one unit of whatever you do? This is what we call, I know it's kind of confusing, but direct relations to sales. This one has no direct relation to sales. This one has direct relation to sales. It's anything that affects the sale of the product. And we're going to go through an example. So we won't overcomplicate it. Okay. Obviously includes raw material, direct labor, payroll taxes and cost per employee, mileage, packing, transportation, delivery. Now, the variable does not mean optional. It's not an optional expense. It is a direct expense to sales. The key again is sales. Does it have a direct relationship to sales? If I sold my services, what cost will automatically be part of that sale? That's the way you need to look at it. And we'll run through an example, like I said, that I wanted you to do. Why do we all go through all of this, looking at it? Because we need to kind of come out with a break even of your business. Break even is just what it is. I made no money. I did not lose any money, basically. That's all I did. No money made, no money lost. I mean, no loss. So I need to know now the strength of the break even. I can do it by dollar. I can do it by time. I can do it by units. How many units of services I need to do? How many volume I need, or when will I reach that break even? There is a story behind the Black Friday. Why is Black Friday end of November? Anybody wants to take a shot at that? Anybody?
I don't see anybody answering that, Raju. Somebody did ask, our ad budgets, why are they not a fixed cost? Advertising.
Ad budgets cannot be a fixed cost. No, it is a fixed cost. Ad budgets, advertising budgets are fixed costs. Okay, the question is, when did Black Friday term came, number one, and number two, why is it always end of November? Get rid of all winter inventory? Well, yeah, it could be. That could be a possibility. You want to get rid of old inventory. But the reality of one of the explanations is that that's when businesses, retailers specifically, were in the black for the year timeline. Now they had enough business, enough cash, and enough sales, and enough profit and loss to carry them over for December. That's why they were able to do all of these crazy sales, if you want to call it. Because in the old days, we did not have computers the way we did it. So we had guys like us sitting in the back room running numbers and spreadsheets and all of that manually, and trying to tell them, we tell the owner, by the way, you're gonna hit break even end of November. That was it. So he knew that he could plan making really hard profit the last year. Okay. So it was a break even. Basically, all of this time he's losing money. Come number 11, month number 11, it's break even. And after that, it's all profit. So you could do a lot of crazy things now with computers and everything. Obviously, that has made it different. Remember in the olden days, guys, I'm maybe giving away my age, but in the old days, we used to say, hey, always go at the end of the month, you get the best deal from the car dealer. When you buy a car, go at the end of the month. Why? Well, because they will break even closer to the end of the month. If you wanted to get a deal, go at the end of the month. But today, with computers and everything, I don't have to wait till the end of the month. I have a client, or I know somebody who does it every 4 hours in the business day. Now, that's a little bit extreme, but you can do it every 4 hours if you want to. Computers and technology has provided that ability to us that we can do. We don't have to wait till the end of the month. You can go today and the dealer knows, okay, I'm giving you a deal, but I need to cover it up with somebody else. Okay? So the reality is technology has helped us, so those old ways of doing things do not carry weight into it. They also pivot. Okay. Now, one of the key components of all of this is gross margin. And what is gross margin? Remember when I said that you have sales and the direct costs associated with the sales? The net amount after that is basically gross profit or gross margin. And why is it important? Because you cost out what you're selling helps you determine the adequacy of gross price for what you're selling. This is how you take that and see if you're really pricing. Remember, a lot of this accounting, you're going to try to make it, you can use it in your day-to-day. You're creating a financial model. You started with explaining it, creating a financial model. Now we want to be able to tell me how I can price and do better, how many pieces I need to sell, when I'm going to break even, when I'm going to start making money. You need a lot of those questions answered, okay? And this is how we're moving. Now let's take an example. The economic model affecting the bottom line. Let's look at it. This is Joe's cup of coffee. He's selling coffee in a pot, price per cup is $2, so he's expecting to sell about 3,200 cups per month. That's $6,400 in sales. Now the direct cost, or in this case, is variable cost, is coffee 50 cents, the cup is a nickel, other supplies will be 10 cents, the stir, the lid, however you want to call it. The total cost variable is 65 cents. So every $2 that I'm selling, I have to spend 65 cents. Definitely every. So if I sell less, I would sell less. I'll have less of this expense. If I have to sell more, I will have more of it. That's what we call it variable, because it is variable and it's based and it's a direct relationship with your sales. Has a direct relationship between the two. So based on 3,200 units, my cost is going to be 2,080. I have gross margin or gross profit of $1.35, leaving me $4,300 to cover my fixed cost, which is the rental, the car, lease, transportation, insurance, any other cost that goes with it. Guess what? It comes out to $4,300. I made no money, but I didn't lose any money. So I broke even at $2 and 3,200 units, selling this under this cost with these fixed costs per month. Make sense? Now I want to make a change. I said, I don't want to make zero. I want to make a little bit. I'm going to try to sell more from 2,000 to 4,000 units. All right, that's $8,000. Obviously, the 65 cents multiplied by 4,000 will give you 2,600. I still have the same $1.35 left over. I have now $5,400 to cover my fixed cost. Guess what? My fixed cost is still the same, $4,320. I made $1,000 by going up 800 units in a month. This is how we start creating sensitivity analysis. We start pricing and see, okay, whether units, whether it be price. The next one I'm going to do is the price. I'm going to go up by a quarter. Instead of $2, I'm going to charge $2.25. I'm going to make $4,000 sale. That's 9. But because I am buying 4,000 units, I'm going to go and talk and see if I can get a price reduction of 2 pennies here, for 1 penny here, and 2 pennies here. And guess what? When I do that, I came out with a difference. Instead of being 65 cents, it's 60 cents. I made $2,400 cost, direct cost, for the sales. Whatever for the $4,000, 60 cents at 4,000, 2,400. I got more money left over, 6,600. I made 2,200. The only difference between this example and this is I changed a nickel here and I changed 25 cents there. And it created more profit. This is how, if you have the right accounting, you have it right categorized, you have the right chart of account, you're doing the accurate information. This is how everything else will progress forward. This is how you can make a difference. Now, I agree. This is not going to make money for you, but it will tell you where to focus and what you need to do to make money. You need to do a nickel here, penny here, and penny there. If you do 20 cents, 50 cents, it will give you your pricing. There's more involved when you do projections and all of that. There's more detail involved. But I want you to start thinking about how you can make a difference in your business. It's all about small tweaks. You're not going to make major changes. It's all small tweaks. We made a small tweak here, we made a small tweak there, we made a small tweak here. Guess what? It created a big difference.
And Raju, we had 2 questions related to labor and personnel.
Okay.
Janelle asked, would labor be variable because it can change with sales, or fixed because you will need some labor? And then the second question was, if a federal contract mandates personnel at a facility, is that considered a fixed cost?
Well, let's talk about labor. Labor, in reality, in any business, it has to be in 3 sections. Now you said 3, but the labor is labor. Yes, there is direct labor that makes you save. There is labor that is fixed. Your secretary, yourself, your people who help you internally. So the ones that are here are fixed. Your salary is fixed. Your secretary has no bearing on the sales. Now, the variable cost is if you have somebody here who is manning the car. Right here, this labor cost would be. So labor is a very, very different animal to deal with. Same with materials. Materials could be up here, could be down here. Okay, there are costs that need to be split. Okay, those are the ways you do it. Now, the more details you want, you will spread it into 3. 1 here, 2 here. 1 being any direct labor that addresses the sales, and everybody else who is incidental, which is secretary, any other, drafting, like in construction, you have people who do drafting and everything will be here. Estimating people will be here. The estimating has no bearing on sales. You could estimate as well as you could advertise and still get no sales or no bid. So they've become part of it. Okay. So those are the kind of things that you need to kind of break down between the three. There are a lot of different costs that need to be broken down. And the key here is, again, like we said it in the other slides, is direct relationship to sales. Okay. So when the person asked me about, you can repeat the question concerning the one on the bidding that the federal contract requires a certain minimum headcount at a place.
Yeah, requires personnel at a facility.
Well, guess what? It is a variable cost. Because I do require a day. It's not a fixed cost. It is a direct relationship to sales. Okay. So you need to do now. If you didn't have that bid, or you didn't have that contract, you wouldn't have that man sitting in that job or manning that job. Hopefully that answers the question. Okay, so I'm almost finished here. Questions for you as business owners. You should be asking all of these questions to yourself and to your accountants and your bookkeepers and everything. How will I generate sales, dollar, and revenue? How do I generate? How? Where the money is coming from? Where is my breakdown? What are my total sales costs, sales related costs to do that? What are my fixed operating costs for a given period? You need to break it down. How much sales revenue must I generate to cover all my costs so I can begin showing a profit? It's a break even. Okay, can I generate the needed sales dollar to manage these expenses to have a sustainable and profit? These are some of the type of questions, and a lot more will come after you answer these. Or you need to answer, for you to answer this, you need to answer other questions. It's very, very essential for your small business owner. I think so. That's the presentation. Well, I finished it right on time. I didn't take too much.
Yeah, like clockwork.
Right.
So I know we had one other question. And Raj, you mute yours for a minute. I know we had one other question from Jennifer, who was talking about she's from a nonprofit board and she wants to understand the financials and how to use them. Does the financial statements, does that apply to nonprofits as well, or is it very different?
Well, it does apply very similarly. The best way to answer a nonprofit is show me a nonprofit that is not profitable. For you to be profitable, or even to be a profitable nonprofit, you have to provide profit. It's just that your statement at the end of the month or at the end of the year has to be classified or has rules that it needs to meet as a nonprofit. But it still needs to be profitable. It still needs to generate revenue, it should still manage its expenses, and it still needs to be sustainable and scalable.
So does anybody have any other questions for Raju? This is your chance. This is your chance to stump the professor, stump the presenter. Any other questions in the chat or in the Q&A? Jessica was asking, and then while I mentioned that we did have the poll popping up, so please take a minute to fill out the poll. Can you provide any sources that have instructions on how to set up these spreadsheets for yourself? I guess kind of like templates and things like that.
In reality, there is a lot. You can Google it. QuickBooks has a initial stages of it. I have to be honest with you, every business I've ever gone to, and I'm not saying 99.99%, 100% of the business I've ever gone to and visited, I had to redo their or tweak their chart of accounts every single time. There is no perfect formula. The perfect formula is the one that mimics your financial business model. That is the one. And what does that mean? If your sales go up, your cost of goods go up should be in the same proportion. If it goes down, it should go in the same proportion. Now, the the better and tighter that variance is, or the difference is not as large, is when you really have a strong chart of account. So you may have to go tweak and keep tweaking it. And as your business grows, you will be tweaking that cost of goods sold segment of your chart of account.
And then I did see, I did post in the chat because the SBA website, sba.gov, has a really good walkthrough on small business finances. And they actually do include some templates and things like that that you can get access to. So I would encourage you, sba.gov. They have like a whole tutorial kind of like guide and their small business finances. And then Raju, Diane did ask, what accounting software do you recommend?
Well, I don't recommend any particular one, but there's a lot of good ones out there. Obviously, the first one and the largest one being QuickBooks for small businesses. So where you have Zero, you have Wave, you have other small, smaller, not as big as QuickBooks. The 900-pound gorilla in the industry for small business is QuickBooks, but you have other options also. Remember, accounting hasn't changed. Accounting still is debit and credit. Those 5 accounts hasn't changed. It's just the one that you feel that is comfortable for you and your bookkeeper to work. If you need information, I don't want you to go out and do all the work of a bookkeeper, because that's not your money and get the services done. A lot of these services you can outsource. So you need somebody who knows what he's doing, provide you the information, and you can review that information with that person.
Okay. And then I just see Diane mentioned about her QuickBooks, that her QuickBooks has never been right, even with help from an accountant.
I have to be honest with you. What is why do we go to accountants? We go for them to make sure our taxes are right. So they are tax compliance people. Their job and their revenue stream is tax compliance. Nothing wrong against them. They do the bookkeeping and do a lot of these other things for other additional services, so they can get you as a tax client. They're not really interested. The real person who you need to really work with week in and week out, month to month, is your bookkeeper. The bookkeeper becomes the essential. The accountant is going to take whatever information you give him, put it into the spreadsheets and the software here, and I tell you this is what's going on, and that he's moving on. He needs thousands of clients to do that and make money. That's his business model. So tax compliant, and some of them will charge you extra for doing all of these other services. But then you have to question whether does he have the time to really work with you one-on-one. And I think so this is where organizations like Florida SBDC and others bring to the whole picture. We do bring that to them. We are a resource for you, and you can use us, and a lot of guys like me in providing you that guidance. At least, hey, this one looks right. I have clients that I meet, like Brian says, I meet with them a lot of hours, and I'm helping them go through all of this, and you will be surprised. Every month, every time, there's something wrong. Okay, that is my job. I mean, that is one of the value that I bring for my clients.
Thanks. So I think we covered a lot of the questions. So Matthew, did you have any kind of closing remarks on behalf of the chamber, or anything else you guys want to mention?
All right, so I want to first of all thank Raju for such a detailed, excellent presentation on financial statements. You covered quite a few of the key things that business owners must have in mind. That income statement, cash flow statement, and balance sheet are the fundamental documents you really need to have to really understand how to make strategic decisions in your business. We've helped at Miami-Dade Chamber of Commerce by providing that. This is part one of a multi-series that we're doing. Coming the next one is August 26th. So I strongly encourage you to continue to register for the next workshop to be a part of these trainings. And if you would like one-on-one assistance with getting your bookkeeping, your financials together, licensing, that's what we do free of no charge to business owners to really help guide them in this technical assistance workshop. It's one thing to hear it, but the day-to-day practical skills to make sure you're allocating time during your business week or a month to actually do this work is very important. And many times you're going to need assistance in doing that. This is your first time trying to figure that out. So I strongly encourage you to go to our website, m-dcc.org/technical assistance to register and for a free technical assistance to help you do that. One of the things about being a part of a chamber, we have resources of a consortium of bookkeepers, accountants, lawyers, and those who can help you with your business if you don't have the time to actually do so. So take advantage of these programs because once you have a very clear understanding of your finances, the world opens up in terms of you understanding how your business can move forward, how much income you can personally take home, how you may be able to hire other employees and expand your services. So understanding these fundamentals will give you more power to make effective and strategic business decisions. You can also join our small business owners like yourself every Tuesday at 4 o'clock to learn more about business, to talk strategy. This has been one of the most powerful experiences we've had with business owners. We invite people like the SBDC, Career Source, Beacon Council, quite a few to come to these sessions to share the latest resources and information. And what makes this space so powerful is that when the pandemic hit, this was a space where a lot of business owners were able to come and get the latest information about resources. And many of our members were the first to get PPP, EIDL, Google Grant, Facebook Grant, Verizon Grant, and many resources because business owners like yourself will come on, share their resources, share who they spoke to, and the process to go overcome the obstacles. So go to our website, www.m-dcc.org, go to events, upcoming events, and register for our Tuesday meetup. And just jump on when you have the time. We send a reminder out. Once you register, we send a reminder out every Tuesday. So when you have the time and availability, jump on and be a part of this Zoom call. So you can network and learn from other more established business owners and those that are just like you and maybe just starting your business. We invite you to come in tomorrow to our in-person meetup. This is going to be outside. We're going to wear masks. We're going to make sure we adapt to COVID protocols. But we want to make sure that we get back to business and people are engaging with each other to network, learn more, establish those business relationships that can take you to another level. So check us out at one of our members, Lorna's Caribbean Grill in Miami Gardens, to learn more about the Miami-Dade Chamber of Commerce and how you can be a part of it or just network and mingle with other business professionals. We also have another series going on with our Women's Business Council. And Women's Business Council has been literally taking the forefront of really sharing knowledge between generations. So we have a few women millionaires that are sharing their experience. How I made my first million, our money mistakes, the money moves I wish I would have made is the upcoming one for next Thursday at 6 o'clock. So check out, if you want to schedule an appointment, feel free to give me a call. Feel free to go onto the website. My name is Matthew Pyatt. I just want to thank Brian, Raju, and everyone at SBDC for really pulling this together and make sure that our business owners get the latest information about how to be more effective as you do business. So I want to thank each and every one of you for being a part of this experience. Check out the rest of our technical assistance workshops at the Miami-Dade Chamber of Commerce. And if you want to look at the recording, we will have it up within the next 24 hours on FIU and also at the Miami-Dade Chamber of Commerce page. So thank you very much, Brian, Raju, and all. And so on behalf of my president, Eric Knowles, and the whole team here at the Miami-Dade Chamber of Commerce, Beverly James and Paris Ward, we thank you for being a part of taking your dream and your passion, building capital, building profit, hiring people, and really contributing to the fabric of our society. Thank you very much.
Take care, everybody. Have a great day.
Thank you.